95% of traders consistently lose money. This shocking statistic holds true year after year. Most people believe the reason is complicated. They assume it's about secret algorithms or perhaps exclusive market data. Maybe it's access to the best trading gurus. But these assumptions are fundamentally flawed. The truth is far simpler. Every struggling trader I have ever coached shares a common characteristic. They have access to the same charts. They use the same indicators. They see the same action patterns. Yet their results remain consistently negative. The critical difference lies elsewhere. It resides within. A profound psychological pattern separates winners from losers. This pattern is rarely discussed. It is almost never directly addressed. Until you master this internal landscape, consistent profitability will remain elusive. It is a fundamental truth of trading. Smart money operates differently. They do not chase. They hunt liquidity. Every significant market movement requires fuel. This fuel comes from retail traders. It means retail traders must be positioned on the wrong side. This is not some abstract theory. This is how financial markets actually function. Professional traders identify specific zones. They find where retail stop losses cluster. They pinpoint where breakout buyers will eagerly enter. They know precisely where weak hands will panic sell. Then, they systematically trade the opposite direction. They use retail orders as their entry or exit. Retail traders, however, do the opposite. They chase aggressive breakouts. Often, the move is already exhausted. They place their stop losses in obvious locations. These spots are visible to everyone. They enter trades when the setup feels obvious. This means smart money has already positioned itself. They are now preparing to distribute into new retail orders. This behavioral disconnect is not a coincidence. It is a direct result of inherent human psychology. Our brains are not naturally wired for effective trading. We are designed for survival, not speculation. Our ancient instincts often betray us in the markets. Consider the powerful urge to get in. A stock suddenly surges 3% in minutes. Fear of missing out or FOMO takes hold. A retail trader might jump in. They buy shares at 0.72. The momentum feels irresistible, but professional traders see something else. They see a liquidity grab. They see a trap. The smart money had already bought at 0.10. They created the initial upward impulse. Now they are selling into the retail buying frenzy. The retail trader buys, the smart money distributes. Suddenly, the stock reverses. It drops to 0.50. The retail trader now faces a loss of 0.22 per share. They panic. They exit. This cycle repeats daily. It creates a feedback loop of frustration. Retail traders constantly chase, constantly lose. They then search for new indicators. They look for different chart patterns. They believe the external solution is key, but the problem is internal. The issue is not the chart. The chart simply reflects market activity. The issue is the interpretation. It is the emotional response to that activity. It is the impulsive action driven by fear or greed. These are deeply ingrained psychological responses. Another common pitfall is loss aversion. Humans intensely dislike losing money. This is a well-documented cognitive bias. A trader might be down on a position. Their trading plan specified a stop at, but they hesitate. They move the stop loss. They hope the market will recover. This hope is a psychological defense mechanism. It protects the ego from admitting a mistake. But the market has no ego. It moves objectively. The loss often grows larger. That becomes 500. Sometimes it becomes 500. This single psychological flaw destroys countless trading accounts. It prevents proper risk management. Successful traders approach losses differently. They accept them as part of the business. Jesse Livermore, a legendary trader, understood this. He once said, "There is nothing new in Wall Street. There can't be because speculation is as old as the hills." He recognized human nature's constancy. He mastered his own responses. Winners view a small loss as tuition. It is the of doing business. It preserves capital for better opportunities. They cut losses quickly. They let profits run. This sounds simple, yet emotionally it is incredibly difficult. It requires immense psychological discipline. Think about confirmation bias. A trader finds a stock they like. They might see a bullish indicator. Then they actively seek out more bullish news. They ignore any bearish signals. Their brain selectively processes information. It reinforces their existing belief. This makes objective decision-making impossible. This bias leads to stubbornness. It leads to holding onto losing trades too long. It blinds traders to shifting market dynamics. They become emotionally attached to their initial idea. The market, however, does not care about your idea. It cares about supply and demand. The elite traders, the consistently profitable ones, understand this. They spend less time hunting for the perfect indicator. They spend far more time mastering their own minds. They develop robust mental frameworks. These frameworks allow them to execute their plan. They help them navigate uncertainty. They enable disciplined decision-making. They recognize that emotional triggers exist. They know precisely when their own biases are likely to emerge. Then, they have a predefined process. This process counters those natural inclinations. It forces them back to objectivity. This is the real difference. It is not about a secret indicator. It is about a secret internal operating system. This system is cultivated over time. It requires dedicated effort. It demands deep self-awareness. It means understanding human psychology. Consider Paul Tudor Jones. He is a billionaire hedge fund manager. He famously stated, "Don't ever play hero. Don't ever get the idea that you're smart." This speaks to humility. It speaks to controlling ego. Ego is a deadly enemy in trading. It leads to overconfidence. It leads to oversized positions. It leads to catastrophic losses. Many aspiring traders chase fleeting signals. They subscribe to countless chat rooms. They buy charting software. They jump from strategy to strategy. Each time they hope for an external fix. They believe the next guru holds the secret, but the secret lies within themselves. They need to build a mind that can handle the market's volatility. They need to develop unwavering discipline. They must cultivate an objective perspective. They need to manage their emotional responses. This is the foundation of lasting success. Without it, every strategy eventually fails. This understanding, the psychological frameworks that separate the top 5% from the 95% who never make it, is exactly what you'll find inside the seven-figure trader's mind vault. It is the complete psychology system. It contains everything the elite traders studied. It offers the mental systems that turned struggling traders into consistent winners. This isn't about indicators. It's about internal mastery. The frameworks, the audiobooks, the mental exercises. What every seven-figure trader has studied and mastered. The mental systems most traders never even know exist. Link in the description. But let's continue exploring this critical path. Mastery of self begins with recognition. You must first see your own patterns. You must identify your own psychological traps. Only then can you begin to dismantle them. This is not a quick fix. It is a journey. The journey starts by documenting everything. Keep a detailed trading journal. Record your entries and exits. Note your thought process for each trade. More importantly, record your emotional state. Were you fearful? Were you greedy? Were you frustrated? This self-analysis reveals patterns. You might discover you always chase breakouts. You might find you always move your stop loss. Perhaps you revenge trade after a big loss. These are critical insights. They are the keys to your improvement. Successful traders build robust pre-trade routines. They define their risk before every entry. They know their maximum loss. They set clear profit targets. They commit to their plan. This minimizes emotional interference. It fosters a systematic approach. They also understand the power of probability. Not every trade will be a winner. This is a mathematical certainty. Accepting this reality reduces emotional impact. A loss becomes just one data point. It is not a personal failure. It is part of the game. Richard Dennis, a legendary commodities trader, proved this. He taught a group of novices, the turtles. He showed them that a systematic approach works. It works even for beginners, but strict adherence to the system was paramount. Emotional deviation destroyed performance. Many traders know what to do. They can articulate sound trading principles, but they fail to do what they know. This gap is entirely psychological. It is the chasm between intellect and emotion. Bridging this gap is the trader's greatest challenge. It requires self-awareness. It demands relentless self-correction. It means building new neural pathways. It means reprogramming old habits. This is why winners study themselves. They understand that their mind is their most valuable asset. It is their ultimate trading edge. They invest in their psychological development. They read books on cognitive biases. They practice mindfulness. They develop mental resilience. They seek out mentorship on emotional mastery. They recognize this is a continuous process. This ongoing internal work yields profound results. It transforms inconsistent traders. It turns them into consistently profitable ones. They gain an edge that no indicator can provide. It is an edge rooted in human understanding. It is an edge born from self-mastery. Your trading results are a direct reflection of your inner game. Focus on perfecting your internal operating system. Understand your emotional triggers. Build robust mental defenses. Your charts will then make much more sense. Your execution will become seamless. Your profitability will follow. The greatest traders in history were masters of their own minds. They faced the same fears. They felt the same greed. But they developed mechanisms to control these impulses. They understood that the market is a mirror. It reflects your true self. So stop chasing the next hot signal. Stop searching for the magic indicator. Instead, look inward. Invest in the one asset that truly matters. Invest in your trading psychology. This is the only path to consistent, long-term success. It is the path taken by every true market legend. Link in the description for those ready to embark on this transformative journey. The journey to trading mastery is fundamentally internal. Many aspiring traders chase external indicators. They seek the perfect system or secret strategy. This external focus is a common, costly trap. It diverts attention from the true battlefield. The real challenge lies within your own mind. Your psychology dictates your trading outcomes. It shapes every decision you make. Consider the typical amateur trader. They scan charts for quick profits. They might see a stock suddenly surging. Fear of missing out takes hold quickly. They jump into the trade impulsively. Often they commit too much capital. The stock then pulls back sharply. Panic sets in almost immediately. They cut their losses too late. Sometimes they hold on, hoping for a rebound. This hope transforms into a deep regret. The cycle repeats endlessly. It leads to frustration and account depletion. This pattern is not about market conditions. It reflects a lack of mental discipline. It shows an absence of a robust trading plan. Amateurs prioritize instant gratification. They dream of overnight riches. They ignore prudent risk management. They let emotions override logic. This approach is a recipe for failure. It consistently undermines their potential. Now contrast this with a disciplined professional. This trader understands market dynamics. They acknowledge inherent uncertainties. They know that losses are part of the game. They focus on process, not predictions. They develop a comprehensive trading plan. This plan includes clear entry criteria. It defines precise exit strategies. Most importantly, it dictates strict risk management rules. Trader A, driven by greed, sees a strong move. They buy heavily without analysis. They hope for a continued parabolic rise. Trader A risks 10% of their account. A small pullback wipes out their gain. Then it hits their emotional stop. They exit with a 5% account loss. This impulsive act costs them dearly. Trader B, however, observes the same move. They check their system for a valid setup. They identify a clear entry point. Their plan dictates a 1% risk per trade. They calculate their position size carefully. They place a protective stop loss. The market moves against them slightly. Their stop is triggered for a small loss. Trader B accepts this outcome calmly. It is simply part of their process. They move on to the next opportunity. This difference is profound. Trader A is reacting to fear and greed. Trader B is executing a predefined strategy. Trader B's capital is preserved effectively. Trader A's capital erodes rapidly. This is the psychological edge in action. It separates consistent winners from chronic losers. The psychological mechanisms are powerful. Our brains are wired for survival. They seek patterns and avoid perceived threats. This can lead to cognitive biases. Confirmation bias makes us seek validating information. We ignore anything contrary to our belief. Recency bias makes us overemphasize recent events. We extrapolate past performance indefinitely. Overconfidence can lead to excessive risk-taking. Fear causes us to freeze or panic. These biases distort rational decision-making. True market legends mastered these internal forces. Jesse Livermore, a pioneer of speculation, learned this lesson. His early career was marked by explosive gains. It was also riddled with devastating losses. He would over-leverage based on conviction. He let his emotions dictate his position size. He learned the hard way that discipline matters most. Livermore eventually developed strict rules. He waited for clear market signals. He managed his risk meticulously. He became a master of his own mind. His legendary short of 1929 proved his evolution. He traded his plan, not his feelings. Paul Tudor Jones exemplifies psychological mastery. He famously stated, "I have a stop at 0." This means he limits all losses ruthlessly. He does not hesitate to exit a losing position. His focus is capital preservation above all else. He waits patiently for high-probability setups. He never over-leverages his portfolio. He understands the power of compounding. Protecting capital allows for future opportunities. This mindset is his primary edge. Mark Minervini, a champion stock trader, echoes this sentiment. His system identifies leading stocks. He buys strength, not weakness, but his true success lies in execution. He cuts losses quickly and automatically. He lets winners run for significant gains. This requires immense psychological fortitude. It means overcoming the urge to prematurely profit. It also means accepting frequent small losses. His discipline is the core of his method. These traders did not possess secret indicators. They mastered their own minds instead. They developed unwavering discipline. They adhered to their trading plans. They understood market regimes and conditions. They knew when to be aggressive. They also knew when to step aside. They waited for their optimal edge to appear. This often means extended periods of patience. It means preserving capital for prime opportunities. Consider how this impacts long-term wealth. An amateur trader might gain 10% one month. They might lose 15% the next. Their account balance fluctuates wildly. They often end up back at square one. This erratic performance destroys confidence. It prevents any meaningful compounding. A disciplined trader aims for consistency. They might target a modest 2% gain per month. They accept small losses of 0.5% regularly. Their win rate might be 40–50%. However, their winning trades are larger. Their risk-reward ratio is favorable. Over time, these small, consistent gains add up. Let's illustrate with specific numbers. Imagine an initial capital of 0. Trader A experiences wild swings. Month 1 plus 15%, 750 gain, total 750. Month 2 minus 20%, 750 loss, total 0. Month 3 plus 10%, 300 gain, total 300. After 3 months, they are barely ahead. The emotional toll is immense. Trader B maintains strict discipline. Month 1, plus 2% gain total 500. Month 2, plus 2% gain total 10. Month 3, plus 2% gain total 530. Their growth seems slower initially. However, it is consistent and compounding. Extend this over several years. Trader A struggles to stay afloat. Their account never truly compounds. They are constantly fighting themselves. Trader B compounds their capital steadily. At 2% monthly, zero becomes 700 in 1 year. In 5 years, it grows to over zero. In 10 years, it surpasses zero. This is the power of consistent discipline. It is the magic of controlled compounding. This is achieved through psychological mastery. This progressive growth is not about luck. It is about a methodical approach. It requires deep self-awareness. It demands rigorous emotional control. It necessitates unwavering commitment. You must learn to manage your mind. You must understand your inherent biases. You must develop strategies to counteract them. This internal work is non-negotiable. It is the foundation for all success. The systems that actually work are simple. They are not secret algorithms. They are frameworks for disciplined action. They teach you to identify your edge. They guide your position sizing. They instill robust risk management. Above all, they cultivate mental toughness. This exact framework, the one consistently profitable traders use, is covered in the 7-Figure Trader's Mind Vault. It is the complete psychology system. Link in the description. This comprehensive program does not promise riches. It offers the tools for self-transformation. It provides a structured path to discipline. You will learn to identify your emotional triggers. You will develop powerful coping mechanisms. You will build a bulletproof trading mindset. This inner game is what truly matters. It is what separates the legends from the rest. The journey starts with understanding yourself. It progresses to controlling your reactions. It culminates in consistent, profitable execution. This is not about chasing market noise. It is about mastering your inner world. It is about cultivating profound self-awareness. It is about applying proven mental models. These are the principles studied by elite traders. They are ignored by those chasing fantasy. The market provides endless opportunities. Your ability to seize them varies. It depends entirely on your mental state. A calm, rational mind sees clearly. An anxious or greedy mind makes errors. Invest in developing your psychological edge. This investment pays the highest dividends. It ensures your long-term survival. It guarantees your potential for growth. It is the bedrock of trading success. Embrace the psychological challenge. It is the most rewarding aspect. It transforms you as an individual. This transformation extends beyond trading. It impacts every area of your life. It builds resilience and focus. It enhances decision-making skills. It cultivates patience and wisdom. This is the true power of psychological training. It is the path to becoming a market legend. The journey to becoming a market legend demands more than just technical skill. It requires profound self-mastery. Many traders chase strategies, indicators, and signals. They spend countless hours studying charts, yet consistent profitability remains elusive. Why does this happen so often? The answer lies within each trader. It is not the market you are truly fighting. You are battling yourself and your own mind. This is the silent struggle of countless aspiring traders. They understand entry points. They know their stop losses. They even identify potential targets. They follow systems diligently on paper, but when real capital is on the line, everything changes. Fear creeps in quickly. Greed often takes over. Impatience becomes a destructive force. They deviate from their carefully constructed plan. They make impulsive, emotional decisions. They take trades they shouldn't even consider. They hold losing positions too long. They cut winning trades too short. This emotional roller coaster leads to deep frustration. It causes severe account drawdowns. It ultimately leads to giving up altogether. This destructive cycle repeats endlessly for most. They believe a new indicator will save them. They seek the next holy grail system. They ignore their inner turmoil, but no external system can overcome a fractured psychology. No technical indicator can fix a mind prone to panic. The true problem is not external to you. It is an internal battle for complete control. Your mind is your most powerful asset. It can also be your biggest liability. Without proper mental conditioning, consistent success is a fleeting illusion. It is a game of chance, not a true skill. It is merely hopping for luck. Imagine a radically different path. A path where your emotions are your unwavering allies. A path where discipline is second nature. A path where patience is your ultimate superpower. This is not some distant fantasy. It is an entirely attainable reality for anyone. It begins with deliberate psychological training. It requires conscious, consistent effort. It demands consistent, focused practice. It is the real secret of the top performers. They mastered themselves first. Only then did they truly master the complex markets. So how do you begin this profound transformation? How do you forge the mind of a true market legend? It starts with a structured, systematic approach. Just as you rigorously train your body for peak physical performance, you must similarly train your mind. Here is a practical framework to guide your entire journey. These specific steps build an unshakable foundation for psychological resilience. They are not quick fixes or magic bullets. They are long-term commitments for serious traders. Step 1. Implement a daily trading journal. This is much more than just logging your trades. It is a powerful tool for deep self-reflection. Record your precise emotional state before each trade entry. Note your exact expectations for that trade. Document your feelings and thoughts during the trade's duration. Observe your immediate reactions after closing it. Why does this work so effectively? It brings your unconscious biases to the surface. It helps you clearly identify emotional triggers. It reveals your destructive patterns of thought. How to do it? Use a simple digital or physical journal. Dedicate 15 focused minutes each day. Review your entries weekly with an objective eye. Look for recurring patterns and themes. This habit should be utterly consistent. Practice it diligently for at least 90 consecutive days. You will start seeing truly significant insights into your trading. Step 2. Develop a strict pre-trade routine. Before placing any single trade, follow a consistent ritual. This routine grounds your mind completely. It prepares you for focused, precise execution. It separates you from all daily distractions. Why does this work? It creates a strong mental buffer. It reinforces your carefully crafted trading plan. It ensures you are always in the right mindset. How to do it? Start with deep breathing exercises for a few minutes. Review your specific trading rules thoroughly. Visualize successful, disciplined execution. Confirm your exact risk parameters for the trade. Do this before every single trade you take. It might take only 5–10 minutes. Consistency is absolutely paramount here. Commit to this routine for at least 100 consecutive trades. It builds unwavering mental discipline over time. Step 3. Conduct thorough post-trade analysis. After every trade, whether good or bad, analyze it deeply. Do not just look at the simple profit or loss number. Evaluate your adherence to your original plan. Assess your emotional responses during the trade. Identify specific areas for improvement. Why does this work? It transforms your mistakes into powerful lessons. It reinforces good, profitable habits. It actively prevents repeated errors. How to do it? Revisit your detailed journal entry for that trade. Compare your actions directly to your plan. Ask yourself what went exceptionally well. Ask what you could genuinely improve next time. Be brutally honest with yourself throughout. This analysis should take 10–20 minutes per trade. Over 90 days or across 100 trades, this feedback loop is truly invaluable. These 3 steps are not optional for serious traders. They are absolutely fundamental. They require immense patience. They demand unwavering persistence. Do not expect overnight miracles from this work. Real, lasting change always takes time. You are actively rewiring years of ingrained habits. Expect to apply these steps consistently every day. Do this for at least 90 consecutive days. Aim for 100 or more executed trades. Each trade is a priceless learning opportunity. Each new day is a chance to improve yourself. The path to true mastery is always gradual. It is built patiently, trade by trade. It is refined consciously, day by day. Consider the two distinct paths before you right now. One path is very familiar. It is the common path of chasing external solutions. You will keep tirelessly searching for the magic indicator. You will jump from strategy to strategy endlessly. You will experience constant cycles of hope and despair. Your trading account will likely stagnate or slowly dwindle. Your entire trading journey will be filled with deep frustration. This path ultimately leads to eventual burnout. It is the path chosen by the vast majority of traders. It leads directly to the 95% who unfortunately fail. The other path is distinctly different. It is less traveled by most. It demands profound internal work and self-reflection. You will focus entirely on mastering your own mind. You will embrace disciplined, consistent practice. You will develop unwavering self-control and resilience. Your trading results will gradually but surely improve. Your confidence will grow steadily with each trade. Your trading account will begin to compound consistently. This path leads to consistent, sustainable profitability. It is the path of the top 5% of traders. It is the true path to becoming a market legend. Which path will you consciously choose for yourself? The ultimate choice is yours alone to make. To truly walk the second path successfully, you need more than just general awareness. You need a complete, structured system. You need the proven mental frameworks. You need the exact mental tools used by the elite traders. Imagine having immediate access to everything. Everything the most successful traders diligently studied. Everything they personally implemented to conquer their own psychology. This is exactly what you get inside the seven-figure trader's mind vault. This is not just a collection of information. It is the complete psychology transformation system. It definitively separates the top 5% of traders from everyone else. This exclusive vault contains every essential framework. It holds every impactful audiobook. It includes every powerful mental system. These are the exact resources that truly turn struggling traders into consistent, profitable winners. These are the powerful tools that actively build true market legends. Inside this vault, you will find the profound insights of trading in the zone. You will discover the foundational principles of the disciplined trader. You will learn directly from the legendary interviews of market wizards. These are not just ordinary books or concepts. They are proven blueprints for complete mental mastery. They are the very same systems elite traders meticulously studied. They used them to completely rewire their brains. They achieved unwavering, consistent profitability. This vault gives you the precise frameworks that turn emotional gamblers into disciplined professionals. It provides the exact mental tools you need. These specific tools make all the difference. They separate blowing up an account from consistently compounding wealth. This is what the top 5% actually study and master. While everyone else chases the next hot indicator, they master their inner game. Do not let this incredible opportunity pass you by. Do not remain stuck in the frustrating cycle of inconsistency. Equip yourself with the same powerful mental frameworks, the exact frameworks that seven-figure traders use every single day. This is your genuine chance to unlock your full, untapped potential. The link to the seven-figure trader's mind vault is in the description below. This is the ultimate difference between staying stuck and finally breaking through. This complete psychology system is your unfair competitive advantage. It is your personal blueprint for peak trading performance. It is your indispensable key to sustained long-term success. Click the link in the description. Explore the vault now. Start your true transformation today. If you found significant value in this detailed discussion, please hit the subscribe button. Join our growing community of dedicated, successful traders. Share your valuable thoughts in the comments below. Let me know what clicked for you most today. Your insights truly help us all grow together. I will see you in the next one.